Hey guys, here are my trading results for the past week. First, let's withdraw the profits, and then we'll go over the most interesting trades of the week. To withdraw, tap your profile in the corner, go to the withdrawal section, and select a payout method. Make sure it's the same method you used for deposits. The process is pretty much the same for all withdrawal options. I use crypto, so I'll show you how it works with USDT. Just enter the withdrawal amount, paste your wallet address, and confirm with two-factor authentication. You can also check your withdrawal history and see the status of each request in this section. For example, here are my past weekly withdrawals, all completed, and my latest withdrawal is in the queue. I use Trust Wallet for my crypto transactions. If your account is verified and your details are correct, the funds usually arrive in about an hour. Also, I want to share some stats from the past few weeks while this series was on pause. From February 17th to March 9th, I took 206 trades, and the total profit for those 3 weeks is on your screen. Since I withdraw weekly, I'll quickly show you my past withdrawals, and then we'll analyze a few trades from recent weeks, both winning and losing ones, so we can learn from them. I want to start trading, but I'm scared I'll lose money because I'm a total beginner and don't know what I'm doing. I hear this every day. So just reminding you, you can copy my trades for free right now. Just hop on a demo, test it, and see for yourself if it works or not. I trade on Pocket Option, and since I have a partnership with them, you can copy my trades for free as long as you're on Pocket. Instead of paying $150, I'll get a commission from the platform. And no, this won't make you rich overnight, but it gets you started. You'll see how it works, make your first profit, and then decide if you want to go deeper. I see new success stories in my DMs every day, so don't tell me it can't be done. Today it's easier than ever, and you've got the perfect chance to take that first step. The chart was in an uptrend, so I drew 2 trend lines and spotted a classic triangle pattern. Trend continuation setup. The price already broke out and started moving up, so I entered a trade for 8 minutes, expecting further growth. Now, let's check volatility. Before and during the breakout, it was low, which usually confirms a real breakout. But then, boom, the cycle switched to high volatility. Unfortunately, this trade ended in a loss. The price failed to break resistance and pulled back. My mistake? Wrong expiration time. If I had picked a shorter one, the trade could have closed in profit before the pullback. Moving on. This trade was different because there was no clear trend. There was a small local uptrend, but it hit a strong resistance level. In situations like this, there are 2 possibilities. The price breaks through and keeps rising. It bounces off and reverses. I focused on the trend line. If the price broke below it, it would confirm a reversal. Checking volatility, I saw a low cycle switch to high, a strong confirmation for a real breakout. That was my signal, so I entered an 8-minute trade. This was enough time for the price to reach the next support level. To confirm the move, I also used the ADX indicator. The trade closes in profit and we move on. Now, let's look at a downtrend trade. The price was bouncing off the trend line, moving towards support, and forming another triangle pattern. But there's an important detail. The price broke the trend line upward, but bounced off the resistance level. This means that entering a trade To continue the downtrend is only worth it after the price breaks the trend line downward. Now let's look at volatility. When this pattern was forming, volatility was high. This kind of behavior is often linked to news releases, causing sharp price movements. Now let's look at the volatility at the moment of the breakout. Just like in previous trades, low volatility is followed by high volatility. This is a sign of a true breakout. Since there are no nearby support levels below, I open a 5-minute trade. This should be enough time for the price to continue moving downward. I also use the MACD indicator to confirm the trade, as it measures trend strength and direction based on the difference between two moving averages. Pay attention, MACD lines are crossing, signaling a continuation of the downtrend. After the breakout, volatility drops again, but thanks to the right choice of expiration time, the price makes its move and the trade closes in profit. In this trade, I want to show a situation where the market shifts from sideways movement to a trending phase. These moments provide excellent entry points. We had an extended flat market throughout the morning. Volatility followed smooth cycles, and the market moved calmly without any significant direction. After the release of lunchtime news, we saw a strong bullish pump that broke through a local resistance level, made a slight retest, and then surged even higher with an even stronger impulse, breaking a global resistance level. These are clear signs that market sentiment is now strongly bullish. After the breakout, the price consolidates slightly, preparing for the next surge in volatility, meaning another pump. The situation can be compared to an earlier phase on the chart. However, this time, the entry point is much better because there are no more major resistance levels above that could cause a strong pullback. Additionally, we formed a continuation pattern, the flag, which gives us an exact entry point. That point will be after the breakout of the upper trend line. This is a perfect example of a transition from a ranging market to an uptrend. Once all resistance levels are broken and a continuation pattern forms right after breaking the global resistance, it signals that the market is gaining momentum. In such situations, trades can be opened with expiration times ranging from 5 to 15 minutes. Any time frame within this range would be a solid choice for. These examples clearly show why it's crucial to consider patterns, support and resistance levels, volatility, and indicator confirmations before entering a trade. Even if the trend looks obvious, choosing the wrong expiration time can work against us, so always analyze the market thoroughly and don't rush your decisions. If you enjoyed this video, don't forget to like and subscribe. Thanks for watching. Stay safe and be in touch.